Good morning, everyone. Microphone check. Screen check. Looks like everything is working correctly here. Wonderful. All right. Welcome, welcome, welcome. Hopefully everyone has been able to rest up, get ready for the final day of the week, going into Friday. Before we jump in, of course, on the left side of the screen, make sure to read through the Live Trader Morning Prep PDF. Very important to go through and understand everything that is inside of there. If you aren't a member of the SSFTG family or part of the YouTube family, check out the join button below the stream to gain access before our next private webinar. Get access to the SSFTG Discord chat, not to mention the awesome badge next to your YouTube name so you can show your support and all the other cool stuff. If you're trying to figure out what it is exactly that we are doing here, look no further than the Day Trading Academy over on SSFTG. That's packed with about 19 plus hours of material, and that's just kind of the tip of the iceberg. So something to definitely take a look at if you're looking for a bit more info on the trading approach. Please keep in mind that on the YouTube broadcast side of things, it does have between a 3 and 30 second delay, depending on where you're logging in from. But if you want to level up to the VIP status, you can enjoy the exclusive permanent access to our non-delayed live analysis stream via Zoom direct meetings. That way you don't have to deal with any delays, as well as the monthly VIP webinars that we do, private VIP events, all kinds of cool stuff. The list goes on and is continuously growing there as well. So whether you're here and you're totally new, or you're a veteran over on the VIP stream, welcome. I'm glad to have you here with me today to wrap up this week. And yeah, we'll see what kind of opportunities we can get our hands into. Let's take a look at some charts, some news, see what's going on for today, all that fun stuff. Of course, along the way, don't forget to grab your morning DP levels. Those are posted every morning for the major markets that we take a look at. I got to be honest, I'm starting to think that I might have to add a secondary section for crypto here. Geez, they're starting to get a heck of a lot of volume on there, but I feel like that's a rabbit hole that could that could end up taking hours every morning, and I just don't know that I want to deal with that. But either way, we've got all those levels there for you. Looking at the news calendar for this morning, the only news that we really have for today was at 8:30. Building permits came out better than expected, not by much. 1.766. The forecast is 1.75. Not a huge difference there. As far as other news, Michigan numbers at 10 o'clock, just like normal for a Friday. 1 o'clock, U.S. Baker Hughes oil rig counts, and then the CFTC speculative net position stuff at 15:30. That's about it. So, pretty straightforward. Not a whole lot going on the news calendar, and there's not really much that we're going to have to worry about for today at all. Looking at the beginning on the Nasdaq here, as far as any updates or where we've gone, the channel's growing consistently, isn't it? Yeah, definitely. We're close. 2,000's around the corner in terms of subscribers, so it's getting there. It's almost there. I couldn't believe when we made it over 1,000. That was just it's like some random dude just talking on the internet. Okay, cool. It's really cool to see it grow like that. But yeah, it's 2,000's right around the corner. I was thinking about doing something cool for it, but I'm not sure what. Anyway, before we start jumping down that rabbit hole, Nasdaq really hasn't done much. I mean, we've got a nice breakout above the highs. That's it. I mean, they broke out above the highs. They're pulling back. They've got a potential attempted move higher, but then it just fell flat on its face. There's not really a whole lot going on. If we look at the price from the beginning of the day, I mean, you can see what's going on. They're building a huge volume node at 14,050. They were built up around here, which, I mean, let's be fair. This is probably buyers accumulating and then looking for a rally up. I think that's fair to say, especially given hindsight and what everything kind of followed through. So assumably this volume back here was buyers. Seeing volume come in here, if it were lessening volume, then you would expect it to be profit taking, right? But that's not the case. We're seeing it actually increasing. So not only are these buyers taking profit, but this could be potentially larger buyers from yesterday taking profit up here as well, causing a big brick wall of volume. It doesn't mean that this is going to be the top or the high of day, but it could mean that it's going to cause some problems. We do have a nice L1 rotation, which has gone back up to the top. So buyers will keep looking for more L1s. And now an L1 lines up with that earlier volume node and settlement. I mean, it's about as good a spot as any. The only thing that'd make it better is if we had some better line of support coming along the way. But that doesn't happen until, I mean, at minimum, way over here. Well, thank you. I appreciate it. So right now the Nasdaq's breaking back down again. I mean, this is kind of the concern. We've got higher highs, but the MACD showing lower highs. There's some problems. You know, the other side of it is who wants to short this thing? I don't. So I think more than anything else, the only reason it's going to go down is because it won't go up. Nobody wants to buy up here, so it just kind of casually grinds its way lower. Looking at the S&P, it's pegging the top of the channel. Lots of resistance up here. We're seeing it get all kinds of jumbled up. If we look at the overall volume from the beginning of the day, they're, of course, same thing here, building up a nice little chunk of volume up here in the 41,750s. And here we can see what you would expect to see initially, profit taking, and then accumulation, right? So we've got the profit takers ahead of the highs, and then the sellers coming in, right? So this is giving you an idea that it makes a little bit more sense that potentially at least the S&P is a bit more overdone and a bit more poised for that pullback. Nasdaq going for the rip. I'm in short. I like it. I mean, this is the spot from a bigger perspective, at least back down to like the 14,000s, 1410s. Gold, geez, gold hitting the nitrous to the upside. Big L1 hold, big breakout to the upside. Buyers are going to be looking for another L1. I can't say I blame them. So far, it just keeps going up and up and up and up. And if we look at this from the measured leg perspective, see if anything kind of comes into perspective. We got this first move up. The second one went about 1.5 visually. So usually that would give us the clue that the third leg is going to be equidistant to the first. That gives major upside objectives and resistance at around 1788 on gold. So it's still got room to go. They've got room for another L1. They can keep it going. But when we start creeping up into these 88s, I mean, unless it starts rifling through it, I'm not really going to want to do anything but short up there. Or at least get out of longs. Crude oil pulling back a little bit further. Mostly a range. I mean, there's a lot of support coming in the 63s, in this 63.40 area. But there's no structural support. That's a little bit further down. That's likely what they're waiting for. So it's got to pull back a little further. Gargantuan divergence across the highs. Over on the euro, we did get the break. And, well, never got the pullback. I was hoping for one more dip underneath these 19,635s before they rallied back up. That was the game plan yesterday. They didn't do it. Sorry, I got to turn my heat on. It's too much. I'm not built for cold weather. I need another vest. I need some hats or something. Anyway, so we've got the euro, which is breaking out to the upside, and this is the concern. So we did make a new high. That's a bit of a bummer from the shorts perspective. Sellers did not want to see that happen. That said, we are in that MAC-WAC territory. We've seen the strength of these. So if this starts rotating down and really starts diving, look out below. That could very easily spark that move down to that half deviation, potentially even back down to the spike and channel lows around those 19,400s. So, I mean, this is a really dangerous spot that it's in right now, if it starts churning lower especially. So the euro, the bulls still have it for now, but yikes. The one saving grace, I think, for the bulls is that they did make a new high. Anyway, over on Bitcoin, we've got a continuation back to the downside, back to the bottom of the channel. We're finding a bit of support down here, which really isn't much of a surprise. And if you look at this from a measured move perspective, that looks almost perfect. I mean, it went through it by a little bit. So what would really line up here nicely would be an inside retest. Right over here, specifically. So, I mean, if possible for, well, until like later tonight, it would be nice if Bitcoin did nothing and just kind of chopped around or maybe gave another retest a little bit later. But that's going to be kind of the hot spot. Looking all right. Obviously, 60,000. That's going to be a big psych level. Over on Ethereum, got that nice L2 dip. This is what a lot of buyers have been waiting for. We have that perpetual bull trend, L1, L1, barely even getting down through the L1 and then going right back up. Couldn't even get to the L1, finally pulling back, L2. This is where buyers are utilizing this deeper pullback to reload into. We already knew to expect the deeper pullback. That was all of that undertow on the top. This is no surprise. Now what we need to see is buyers put in a low here. There's no divergences or anything, so maybe they're not ready yet. But if we can start seeing this churn higher, excuse me, higher low, something like that, that would be really nice. Then you've got that potential breakout point. So obviously we're a bit early, but we are in a pretty nice zone of interest on Ethereum. Very nice. Looking at the Nasdaq so far this morning, we are at all-time highs. We closed up above it and then immediately churned back down as expected. We're probably, although it looks very strong, at least based on history, going to get stuck around this area, chopping back and forth between 893 quarter. Very typically, there are, wow, gold pulling back hard. There are about, at least from what we saw, about 5 to 7 days of chop around this area. We're on day 4 now, going into the weekend. That might, because of the weekend, allow it to be a little bit shorter lived. And if that's the case, we do technically have the 3 days, right? So that might be good enough if they want to keep going back to the upside. Obviously, there's no pullback yet. We're making new all-time highs. So as far as the larger structure goes, we really don't have anything yet. The big thing that I'm waiting for eventually when the pullback does happen is that it's equidistant or close to that pullback so that we can get the A leg equal to the third over here. Same thing we were just talking about, actually. Or on the 60-minute chart, it's not looking so healthy up here, at least for now. Keep in mind, there's still 46 minutes left. A lot of time for things to change. But at the moment, big bull bar breakout above the highs and now failing back lower. That's troublesome, right? That doesn't help. It makes things a little bit difficult. We had sellers initially trying to drive the move down. If we look at the overall volume cluster, we can see they built a relatively low POC. Now, if we look at the volume movement, this would actually suggest accumulation volume. And there was actually some really big pops in volume down there. You see those things? Look at that. That almost took the POC. Wow. So there's some big clusters of volume down there. And since that low was plotted in, if we get a little bit closer here, actually, you know what? Let's just look at it in a 15-minute chart. That'll give us a better perspective anyway. So finish up on the 60 then. We've got more continuation to the upside. This is obviously a V reversal, and we've got a continuation up. Like we were talking about yesterday, V reversals with a failed break and everybody getting stomped, right? L1 seller, L2, 3, 4, 5, all the way up. They got dominated. They broke a new high. It's usually going to be L1 buyers on the other side of it. That's exactly what happened. We've got a higher low, continuation back up. Pretty straightforward. Now buyers want to see these L1s keep going. L1 trend, keep this thing going to the upside. If that's the case, the next support zone is going to be around 14,009. Settlements just below that and 14,000 psych level around there. Jeez, oh Pete. So that's kind of the zone. Notably, if it does want to pull back to an L2, that would be trapping this inside swing at 952 really nicely. We'll see. Anyway, looking at the 15-minute volume, this will give us a better idea of what's going on here. So first off, let's look at this big drive lower, right? This big drive lower left a POC cluster here. The market broke above that, but it never came back. That's a big clue. That means that there are potentially a lot of assumed, at least, I'm assuming they're shorts, given the way that it kind of built up here and how they failed. If they were buyers, they didn't do very good. So given that we've got the big volume cluster and detrending in the volume, I would assume that those are sellers who took profit on the way down. If they did not exit when it started reversing back up, they were never given a chance to get a break even. And that's usually not very often. Now, if we draw the volume on the other side, that probably means that we've got a big VVP there. But let's see what we've got going on so far. And actually, I don't want to go into today yet. Got to wait for it to finish, but let's go back to just yesterday's rally with the area of interest around 13,900. The market came back to that zone and then just reamed above it, and there is a VVP there, so it's no surprise, and built in a very large accumulation volume. So here we can see, right, this is sellers potentially attempting to put in the top. Now, we know, based on hindsight, that didn't work. And we still know that they had a really hard time getting back to a break-even point. If we combine those 2 days together, we'll likely see the volume cluster still up here, and it shifted a bit further. So by the end of the day, effectively what these sellers were able to accomplish, right? If we look at what they were able to do based on the volume zone, they had the drive down. They obviously got dumpstered. It didn't work. They broke out above it. Total failure. They built in all of the volume above the highs, and they were able to create their average position price right there. Now remember, the objective of these traders are not to make money. The objective of these traders is to get out of the trade, right? It hasn't broken the highs. So they're hard stops, they're breaks, they have to e-break this thing out. That's above the top. It never happened. I mean, realistically, it might have by like a tick or two, but it barely stayed around. And we're talking Goldman here. They're not putting it one tick above the high stop. So, right, I mean, we're talking some fund cash here. So the fact that it never really broke above those highs and rotated down, where do you think they're going to try to exit? Right back at their average. That's exactly what they did. So this entire move right now that we're seeing is very likely fueled by shorts who got stuck and they're exiting. And that's really important context, because we know that this move is not just necessarily fueled by bulls, but it's also fueled by shorts getting out of the way. That's a pretty big potential differentiation in how we approach this market. Now, if we look at the overall volume above that, we can see that it's dispersion that's profit taking. Makes sense. We haven't had a whole lot of time to stay up here and build a lot of volume, although they're definitely trying at the 14,050. Jeez. But right now, it's trying to pull back. So if it's going to pull back, realistically, it's probably going to pull back to around 13,960. That would be the zone of interest. If we look at just the volume for today, that could give us a better idea in terms of what the shorter term is trying to do. Let me get the big one out of the way. So if it does want to pull back, I mean, it's pretty obvious. Geez, they almost took the POC. They're going to be trying to get back down to that 975. But if they shift the POC back up and price is staying low, it's a pretty big clue as to what's going to happen next. They're going to try to get that pullback. And there again, it fits that L1, L2 scenario. What a crazy back and forth this thing had. Let's see if they want to pull back. Looking from the Asian session at the start of things, they did have a full deviated move to the downside, went about 1.5, pretty typical on the wicks, and then rotated back up to the highs. Tried going back down for a new low, but that ended up being in the Euro session. As we've seen very frequently lately, the Euro session typically reverses the Asian session, and they went the other way. That other way was, geez, oh Pete, they hit the nitrous on that move up. We went up through the half deviation, which is at settlement. That was a big zone of resistance, or at least you would have thought it would have been. It just screamed through it. Started finding a bit of resistance at the 1 deviation. Usually they go about 1.5, and then it jumped through that, and now we're at 2. Now we're at 2.5. So you can see this thing is gaining a lot of pressure off of the Euro session, trying to get more continuation back to the upside. And typically, when that's the case, if we go backward, we can see that when there's a lot of strength out of that Euro session and they've reversed the Asian session, it usually sticks around for a while. Well, this could just be the beginning of a very long-lasting trend for the rest of the day. 10 minutes until the open. Right now, shorts have short-term control for sure. Looking at just the leg up after they made that new low. Man, they were built in at the top of the Euro session. That's just awful for them. Jeez, OP. So we know that if there were shorts here, assumably, you can kind of see what they were trying to do. First leg down, you've got kind of about an L2, L3 pullback looking for a second leg down. You can visually see what they were attempting to do. It failed, but that's important info because this POC cluster could very easily be shorts at the time. We know that they got dumpstered, and there were a lot of volume orders that hit right there. Maybe they were trying to double up and get a break even. That didn't happen either. When it starts breaking higher, VVP, 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 these are stop runs. They're all breaking above major swings. Finally put on the brakes a little bit here. Let's see what they did with volume. Did they transact enough to shift the POC up? They did. So now, effectively, the shorts that were stuck here, their average is up here. They built in. They've accumulated. They're in profit now. Free and clear. Just really expensive seats to get into the party. So as the market starts dipping down into the VVP where it broke out before, you better believe they're going to be looking to start exiting and liquidating some of these shorts. And if it starts going back up to 14,050, they're likely not going to want to see a move very high up. They've already managed the position to a degree where they've mitigated all of the risk. Why would they let it go back negative again? Or at least not by much. Let's make this a little less punch you in the face. 15? 10. Yeah, sure, that gets the job done, whatever. So 14,050 is still the zone of interest. But what I want to see is what kind of volume is stepping in on this move down. They built up at 14,050. That's where the POC built in, was on this pullback. That's important to note because what were they likely trying to do here, right? Use a little bit of visual forecasting. They were probably trying to get a higher low continuation. Guess what didn't work? They got whacked. So now that we're pulling back, guess what these buyers are trying to do? We see the volume stepping in. They're trying to get a deeper continuation back to the upside. Buyers still have a reason to believe the market, but it's fairly obvious that the shorts have built in. So if the bulls are going to take this, they've got some work to do.
Honey, I'm leaving.
1 second, be right back. All right, we're back. Sorry about that. Bulls trying to build that continuation leg to the upside. So far, 14,050 is the dominant volume. Jeez, so Pete, Doge is up to almost 40 cents now. Doge has gone nuclear. This thing is unbelievable. The hype train is strong. The thing that makes me nervous about Doge is that all it takes is like Elon to say one negative thing, you know? And all of a sudden there's like a 40% pullback. Well, actually for me, that actually might be nice because then there'd be a way to buy in. But from the perspective of people who are already long, it's kind of shaky ground. Phenomenal rally to the upside though on Doge. Absolutely incredible. In the major volume cluster, just as a side note, the major volume cluster on Doge, at least from Bittrex, is at 6 cents, 0.061, rounded up 6.2. So the buyers on average volume are, what would that even be? Holy cow. At the moment, from that average volume, it's up 550%. Got the open around the corner in about 4 minutes. Not a whole lot going on so far this morning. Now that we've gotten a little bit closer to the U.S. session, things calming down a little bit. Sellers are still putting a lot of pressure in this. The one thing that stands out at the moment... Hang on. Thank you, honey. Sorry, my daughter was watching my phone. Alright, sorry about that. Our neighbor just got back. Was feeding their aminals for him. Alright. That's a great question, Pavel. So what's the safest broker that trades Doge? First off, I know a lot of... Whoa. 928. Hang on a second. Bulls just kicked this... just ripped this thing back to the upside. Wow. Just as a side note, Doge is the 5th most capitalized coin now. Just saying. Looking at the volume so far, in terms of volume, 18 almost $19 billion on Binance today. Binance is very reputable, so that would be where I would go. You can buy it on other platforms, like I know CRO, their platform has it, and you know there's definitely some alternatives. But if you're looking to buy it and hold on to it for a while, I don't exactly see Binance going anywhere anytime soon. So obviously, it's always preferable to have your own on computer hard wallet or software wallet at least. But to be honest, I don't know how that works with Doge. I've never really gone in that far. I've always just kept Doge on the exchange. So it never used to move. Oh, it's 4.5 cents today? Hot diggity. It's Friday, so my daughter's home. Don't mind her singing in the background. She will be the the audio entertainment for today. All right, 9:30, starting to get a nice little pullback here, getting a bit of a dive down. We came back up to that 14,050, and we know the context here. Sellers built in, and so far it appears as though they've defended their positions. I would say if I were a short from 14,050, personally, that if I saw something like this, came all the way back up, challenged the break even after all of this work, and it starts pulling back down, if I don't start seeing it come out of here, I'm starting to liquidate my positions. I would potentially especially start liquidating positions down into this VVP and buying out of those shorts. So as it's starting to pull down, I want to keep an eye on this volume, because a lot of these shorts who have done all of this work are finally being rewarded for all of that work. Now I want to see, where do they take their profit from that reward? Where is their icing on the cake? If we look at it from the top down, the bigger swing, we just completed a measured leg almost back to settlement. I mean, if you ask me, that seems like it's a pretty good spot, but let's see what the volume's doing so far. So far, it's still profit-taking. Although it's still fairly early. Let's see what the 5-minute Nasdaq volume looks like. They've built it up at at 15. This thing moves too much. Let's see if that changes. On the S&P, yesterday their 5-minute volume was like smack at the top. I'm kind of curious to see what they do today. Oh no, not again. There it is again. 77 quarter. Round 2. Sellers pulling back. Now remember, this is where they had originally built in their shorts. So if it's going to bounce anywhere, look at the volume jumping up immediately once it starts pushing into here. So a lot of these shorts are starting to liquidate as profit down here. They're back to their original entry point. And if it starts to... now, it's not done falling by any means. Maybe it is. I don't know. Maybe a V-bottom's out of here. But very typically, you're not going to see them exit on just the first bounce. They'll scale out a little bit. But the majority of the work is done once the so-called knife hits the board, where it shows you where the low is. Then they do business under that. Or at least that would be the goal. But keep in mind, right? They're going to be a little bit jittery. If you're short from 1450 after being stuck all night... you've built your average up to 1450. You're sitting way in the green. Now you're back down to where you were originally short from. Probably going to liquidate a little bit, right? I think that's fair. That's why it's bouncing here. Rather than anywhere else. Now let's see what they do underneath this low. Double bottom. Oh no. Come on, I know Nasdaq likes being vindictive, but jeez. 5-minute POC has shifted down now, 91. Not really a surprise there. Look at where that POC cluster is. Whoa, weird. They shifted the POC down. Oh, man. Who would have thought? They're still going down, though. They haven't had a reason to exit. This is where they're going to start liquidating, though. They made a low. They finally put in a little bit of a bottom. They built the POC further down. 85 now. This is also, from the buyer's perspective, their opportunity to try to grab a really deep L5. The only reason buyers would take an opportunity like that is because the risk versus, or the reward versus risk is incredibly high. Their risk is below the lows, but the reward's way the heck back up here. So, you know, buyers will obviously take that for very clear, plain is English reasons. But this is the type of trade where I think it's more on the options side of things. It makes more sense, in my opinion, to be approaching that from like a call option standpoint or an out of the money on Nadex or something, you know, like just so that the risk is a little bit reduced. On the future side, we know how, I mean, this thing's dropped just from the open to now half of a percent. It's been not even 6 minutes maybe. Bottom weighted POC now on the S&P 72 quarter. They're trying to hold it on the lows now. We do have that confirmed volume. So you can see what they're doing, right? We made it below the low. All of a sudden, right, out of everywhere, now it's having a really hard time continuing down. That's strange, right? Weird. These are the buyers trying to pick up that on the cheap Walmart special. Again, I think it makes more sense on like the option side of things, but maybe micro futures, something like that. Just a way to reduce the risk in the event that, you know, it goes catatonic to the downside. Volume shifted now. Look at the POC shift down, 13,980. They just swapped it. All of that volume up there, you can see exactly what they did. Look at what the story just told us. They were short here. They built in up here. They exited everything here. It's like textbook. That doesn't mean the market has to stop falling, but it does tell us that it's probably going to have a really hard time now. I can't believe they just shifted the POC down here too. Unbelievable. Oh. bulls trying to get a rotation back to the upside again. Let's see what they do back in this volume cluster at 980. What does the market respond as? They've shifted the POC. She's playing with Barbies. I promise she's okay. Blink twice if you're okay. Bear bars back to the downside. Still watching this 980 zone. Oh, holy cow. Bounced straight off of it. Buyers definitely demonstrating an attempt to try to reverse this market back up again. My daughter's doing the same thing. Yeah, it's she got this new Barbie playhouse, and she's having a lot of fun with it. Buyers are going to be looking for a continuation spike back to the upside here. I like this for a rally back up, but on the lower risk perspective, because if it's going to go, it should go relatively aggressively. We know they're demonstrating volume off 980. So the 2-to-1 for them, which is kind of unfortunate for me, but their 2-to-1 for them is just above the Euro session highs. I mean, the point of interest would really be back up into these 994s. So that's going to be kind of the zone of interest for buyers to try to rotate this back up. We've got the first pullback. We've got the second continuation back up. Jeez, immediately tapped Euro session highs and then dunked right back down again. This thing is moving crazy fast. All right, I got to see the bulls show up to the party this time around. I've given them a lot of time. Now it's their chance to either reward me for that patience or punch me in the face. Garbage bull bar. All right, I'm out. I'll wait for a cleaner signal. Again, the reason why I like this zone is because the risk versus the reward is incredibly high. But from a futures perspective, I've got to play it a little bit closer to the chest. And the buyers so far are having a really hard time. I mean, they're holding this really nice deep L5. They've got the POC shift. They've done everything that they need to do. This is their last attempt. I'll go one more shot on the long side with the objective or the mentality of a continuation back up to challenge quite a bit further now. 16 quarters, preferably even further. Still keeping the risk on the light side because I'm not really seeing the push. And it seems like buyers want to accumulate this area. And we know what the Nasdaq likes doing when they're trying to accumulate an area. 7 bajillion ticks down. Bulls back up. Really strong bull bar. They've got to follow through. Again, we know the context, we know what's going on, but we also know this is the Nasdaq, and they love juking these areas. So seeing a quick little flush down wouldn't be a surprise at all. Potential twin reversal on the bottom if this bull bar sticks the low. The buyers are still very obviously accumulating the base, but that's a really nice bull bar again. I'll give it one more shot down here because this reduces the average to a point where the reward is in a very easy to attain area back to Euro session highs and then potentially further above that. It also means that a failure here is a lot smaller. It's going to be a much more obvious sign. So the first objective is going to be in towards the 92s, but I'd like to see them pulse through it this time. Couldn't really get the pulse through. I'll drop the 1 off there and see if they can keep this going. There we go. There we go. Now we're above the 2-to-1. I don't want this to pull back too much. That's too much. I'm out. I got to keep it on the short term. I only had the 1 left, and the first one juked me, so I've got to play it again, closer to the chest. Nice little washout again. Back to the 985s. That POC area down there is going to be a zone of interest. Buyers still want this. It's just a matter of finding the right timing. They've had a little bit more proof now with this continuation back up. Come on, give it that 985, 984 area. The POC's down there just a little bit further. 5-minute POC is 985. The POC of the entire up and down move is down here at 84. Now, there are a few reasons as to why we may be finding a lackluster bounce here, because this is kind of like, this is sort of like the period at the end of the story, isn't it? You know, I mean, we had the sellers who were in here. They got short. They failed. They built in more. They built in more. They built their average up here. They dove down. They exited. Like, job done, right? There's not really much else. So we kind of have to create a new story. The story right now is with the pretext of these sellers looking to liquidate, and the volume is shifted, and that means that there aren't as many sellers in the way. So buyers will have less trouble getting it to move up. But by no means does this paint a bullish picture. And that's kind of the problem right now. And that might be why we're seeing such a weak response. They did just shift the POC up to 985 on that pullback, though. On the 5-minute chart on the S&P, man, they built the volume at 72 quarter. Tried going above it, went underneath it now. So far, every candle from the open has tested that POC cluster. Really nice continuation volume on the Nasdaq. So again, this is their attempt to try to get it going. I still like this much more from a longer term, like call perspective, options perspective, more than futures. Futures, we've just got to play it really tight to the chest, and those moves aren't going. I mean, they're working, but I want to see them move back up to 1450. Oops. I just saw that Captain G made 25 points. Jeez, oh Pete. Nice job. In what, like 3 seconds too? You probably blinked and boom, there it was. Great work. What? Is that for the horse's face?
Yeah.
Oh. Hang on 1 second, guys. All right. Sorry, the bridle and bit and everything fell off my daughter's horse. Is that tweet from Binance for real? Like, this is why it keeps going nuts. Binance tweets, wow. Now, for anyone who may not understand what that means from the Doge perspective, that's all Doge. So, oy. Nothing like a pump driven by an exchange. I love unregulated markets. They're incredible. As long as you're not an idiot about it. Sometimes you don't even have to be an idiot about it. You just blink and one tweet comes out and boom goes done. Boom goes the dynamite. There goes all the money. Welcome to crypto. A new breakdown through a new low. Buyers did not want to see that breakdown. And now we can see, look at this. Look at exactly what just happened here, right? The buyers, we knew the story all the way down here. They shifted gears. We were under the pretext that the buyers are going to try to get that going back up because the sellers just weren't there. But like we were talking about, it didn't necessarily build a story per se. So buyers were exiting a little bit early, myself included. When it came back down, they tried defending again, but that failed. Look where it rejected back off of. All of those buyers who were trying to get it to go back up now look like they might be running into a bit of trouble. If the sellers start pushing this back to the downside and break, because remember, the L5s are still long, but this is going to shake some confidence a little bit if it pushes back down underneath these 970s, because now the low of day, the Euro session low, that's not too far away. So by no means are the buyers totally out of their positions or anything like that, but they're nervous. This doesn't give them the warm fuzzies. S&P is attempting to separate from volume. Given the context and the bulls' failure to drive back up and looking at the overall 5-minute perspective, although it looks like it would make sense to go short, in further context, it also looks like you'd have to be slightly suicidal to want to do the same thing, or at least account-wise, because that's right at the bottom of the range. Seems like a terrible place to go short. Much better off going long. The one caveat that they do have is this gigantic blow off on the highs and then the rotation back down again. The fact that it rotated back down and held those highs as resistance, and it's very obvious that they exited, that is adding fuel to the downside fire for sure. So if they are going to reach a little bit lower, then the next objective would probably be back in this cluster, down in the 66s, 65s. They've got room. It's still early though. More fist fights around the 985. The S&P on the 15-minute chart looks like a gargantuan twin reversal. Yikes. The 15... Oh, man. Lordy, lordy, if you want some, like, warning bells, if that starts triggering, that's a huge problem. Bulls are trying. We're seeing the Nasdaq trying to push back above. They're giving it a shot. Man, that S&P scares the crap out of me, though. Look at that thing. Straight up, straight back down. And POC at the top. Oy. Danger, Will Robinson. We've got some issues. Ethereum churning back down again. Still no context. I mean, we're in a zone of interest, but we haven't seen them put in a bottom yet. A new low underneath this bottom would be the third press. Usually those are my favorite. So we've got 1, 2, and we're working on the third press low. Yeah, definitely paying attention. Might not be setting up so much on the 15-minute chart as much as maybe a nearer term one, though. Back above POC cluster, buyers trying to get it to rotate back higher. Obviously a big fist fight here. Binance does accept U.S. clients, but on the U.S. platform. There's two different platforms. If you just go to Binance.com from a U.S. IP, you'll get flagged immediately. Like, we don't service you, get GTFO before we have a lawsuit. So they don't service U.S. if you go to like their main site, but they do have a U.S.-based site that you can register on. Market continuing back to the downside again. S&P further drive now with a micro double top hovering at 71.75. That's going to be a big zone of interest. We're also breaking back through volume at 985. We're still trying to develop a little bit of a story here. We know the story kind of found its end right around this cluster zone when the bounce tried to occur, and it failed. That didn't work out very well. But now that it pulled back, we've got the continuation down. Another attempt to try to get that higher low. Really nice bull bars. I mean, you can see they're definitely still trying. It's just we're now stuck in a bit more of a wedge. Maybe holding the inside swing. It would have looked a lot nicer if we went just a bit further down, though. Super challenging spot right now. Ethereum breaking down through the lows. But again, this is a big zone of interest for buyers looking to attempt accumulation. You've got to wait for the bottom to actually, like, show up, though. Doge made it up to 44.8? Are you kidding me? What? Golly gee willikers, man. This thing is going bonkers. I feel like all of the other coins are dropping because everybody's getting rid of them to buy Doge. Like, that feels like what's happening right now. All of the other coins are dumping, but Doge, that one's up 81% today. People probably FOMO'd like crazy up at the top. Bummer for them, but let's see if they, man, look at the 15-minute chart on this, just gets obliterated. Let's look at this oh my God. Let's look at this most recent rally up. We're back to the POC cluster. So if buyers are buying on Doge, this is where they're doing it. 31 cents, 32 cents, bingo bango, right here. So that's the hot spot in the near term, at least. I mean, in the far term, obviously, they were built way the heck down here. But so in the short term, do I think it's too late? No, definitely not. They're poised right now for a short-term bounce back to the upside. And keep in mind, this thing is really herky-jerky, but the 32-cent mark from there, I mean, it's already jumped 12%. It's insane. It wouldn't be honestly, it wouldn't be a surprise at all to see Doge like above $1 today, just out of FOMO. I wouldn't want or expect it to stay there for very long, though. From a psychological perspective, at least. You know, another way to look at it would be like if I were going to be jumping into Doge, I wouldn't be doing it with, you know, tens of thousands of dollars unless that's like dispensable cash for you. It's more like, hey, you got an extra, you don't want to go to McDonald's today? Throw $20 in Doge, you know, or hey, you know, maybe skip on the Starbucks. There's another $5, you know, just like maybe 100, 200, something small while it's gone crazy. It's way high up here. It's very obviously FOMO. But volume right now is supporting this pullback. So, got to give it the benefit of the doubt at least. Breaking down through a new low. This is important because now we can derive a new story. Let's look at it from the top down this time around. Here we can see that we had an obvious build in volume like we were talking about. These are probably buyers who were looking for the second leg up. They got dumpstered. We already know that story. But now we have to kind of change gears. We have to look at this from a different perspective. What could this volume be telling us has happened here? We have, well, increasing volume up accumulation. Big void, big breakout. Lots of people probably stuck from that point, and that's also where a lot of stops are probably hit. It looks like maybe they found a little bit of a bottom, or at least that's where all the stops found orders, down in the 1410s, and then it broke down again. Buyers could be attempting to build a bottom down here, and they just failed. 13,985 if they're looking at it from the other perspective. So now I'm kind of curious to see what they're going to do from there. $960 has shown some support resistance from previous days. Yep. No, the short-term zone of interest on Doge, this isn't the time, like, unless you're scalping intraday with, like, leveraged accounts, stuff like that, then yeah, sure, there's that short-term volume. I mean, that's a 15-minute chart, right? Do I want to buy here on this pullback? No, this is way too expensive. I want to see a flash crash, scare the crap out of all these FOMO buyers who probably got stuck at 44 cents, and wipe them all out down in the 22 cents, 20-cent mark. That's where I want to buy in, right? But it's, you know... I play more on the vindictive side of things because that's typically how the market works. I love the wings on that one. That's awesome.
Thanks. It has a sparkly bottom.
Wow. Two minutes until 10 o'clock. Actually, only one right around the corner. Ethereum buyers underneath the low. Not like that's much of a surprise. But they did pick it up. Hey, where do you sell for the S&P? Man, right now, not down here. This is where buyers are coming in. I mean, as far as where do you sell, I think a retest back into 72 quarter is feasible. This market's super back and forth enough where I think coming back to 72 quarter is a possibility. A lot of shorts don't want to see that right now, obviously. They just want to keep this going down. But this zone from before, we're down in those 65s. This is where we were talking about earlier, where buyers are going to be building into longs down here if they're shown some sign of support. It's a pretty nice bull bar to try to get that going. So I would rather sell a bit further up. Buyers are really trying to hold on to this low. They're starting to build a bit of an undertow, although it's on the wider perspective. And it's super early. From the downside, if we measure off of the top, again, assuming that sellers have control now with this new low, we've got an L4 off of the top almost perfectly, rotated down into an L1, rotated down again into another L1. Then we finally got a little bit of respite into the top of an L1. Couldn't quite get the L2. Rotated back down to a new low. Finally got the rotation down into a new low. No, just kidding. No L2. It was an L1 again. Really close. But a lot of times that's important to note because we miss the L2. We miss the L2. When it does eventually pull back, it's almost more likely that the L2 is less likely to hold now. Nobody has any faith in it. It doesn't hit. So they stop paying attention to it. So now in this next move, traders are going to be paying attention to the L1, which is what it's projecting off of on the highs, or they're going to be looking for something a bit further up like an L3. Less intent on the L2 unless excess proof shows up. I gotta make this volume not so in my face here. Let's do 20 and 10. Oops. Crap, I did it backward. 10. Move, Zig, I can't see. 20. There we go. What are you doing, cat? All right, back up into the L1s. Sellers will be trying to drive this market back to the downside from here if they're able. The L2 still looks a lot nicer, but it's tough for people to have faith in the L2 if it doesn't work. Trying to see what kind of follow through these bulls have into these L1s. So far, sellers, if they were at the L1, were given a chance to get out of break even. We see that reversal there. Now it's the top of the L1 and their chance to try to push it back lower. So far, it's holding. Gigantic wick on the lows on the S&P and on, well, actually on Ethereum, on Bitcoin, looking across the board here. All right, starting to break back through, now chopping through the top of this L2. Watch what happens when it comes back to the top of this, or L1 rather, when it comes back to the top of it. Do these sellers exit at break even? If they do, that would be a clue that they're trying to get a move back to the upside. We're also testing the major volume cluster at 985. S&P in the shorter term from a scalper's perspective, I think it would be fair for like 49.50 sellers to try to push the market back down. That would be the shortest term. Broke above the top of the L1, now pressuring into L2. The 15-minute on these lows for the Nasdaq looks like they just missed the bottom. 68 quarter. If buyers do come in above this bull bar looking for continuation, their targets are going to be at 69 quarter, and mine's at 69.50, so it's still okay. Nasdaq's back to retesting the volume on the other side again. $66 is currently creating a bit of upward candle gapping, although it's awkward. So far, the bottom of the L2 is still held. They haven't got to the top. The top of the L1 got ripped apart. We're in a very nice zone of support down here. I mean, we've already been talking about like the options and all of them. But now on the future side of things, if we get a bit more confirmation with higher highs, start seeing higher lows, we'll have a bit more favorability on this side too. 69.50 is the area for scalpers, at least on the S&P. Came one tick away. All right, shorts hit at 69.50. Their objective would be at 68.50 to the downside. We're also getting back to the top of the L2 now. So the earlier L2 sellers at the bottom have been offered a chance to get out of break even, which allows more continuation up on the S&P and the Nasdaq both. Secondary objective now taken in, 69.50. Still looking for an average of a point. Testing the final one, but I didn't get any fills. There we go. All right, see if they want to push back down to 70.50. I've lost interest now. They've kind of failed to do what I wanted them to do. But I'll give them a little bit more time to see if they can get that dip back down. On average, it's still about a point, but it's a point in a very bleh kind of way. $72.25 is the 5-minute resistance zone on the S&P from the first 5 volume. If they can't hold off of that, I'm not really interested in staying short for too much longer. Primarily because if they do go further, like we've been talking about, they've got a chance to try to challenge these highs again. From the 15-minute perspective, this is retesting the short's earlier entry point. So there is still resistance here. There's still a reason to be short. It just didn't do it in the way that I wanted it to. Nasdaq is now broken into the L3. The bottom of the L3 sellers had a shot. They were immediately given a chance to get out of break even and then ripped in half. Now we're at the top of the L3, which is having some difficulty as well. Ay, the S&P. Tested, but no fill. Now, it did test the objective. If it immediately starts responding with bullishness, I'm not interested. I'm watching this area very closely on the S&P. All right, I'm out. I'm not going to sit through that fiddle dinking around. It did not follow through the way that I wanted it to. Oh well. I'm not about to give everything back on a Friday. It tested the target. I couldn't get filled. Went back up. Nah, it's just not worth it. Can you draw different scenarios of volume again, like accumulation, profit taking, etc.? Where to look for it on the charts? I know you've gone over it a bunch. Been watching all the videos to get it down. Yeah, for sure. So the big thing when you're looking at accumulation volume is to kind of look at volume backward. You know, if price is going up and volume is increasing, that doesn't tell me bullish strength. That tells me sellers. It could be buyers taking profit. It could be new sellers. I don't know. But that to me is sellers. So the same thing would be true if you have the market going down and volume is increasing. That gives a big clue in to me that those would be buyers inherently. And if the market is still staying underneath the POC, that's showing that the buyers just can't get their grip and it's sliding away from them. So, you know, obviously context is everything, but if we had like a big zone of resistance here and the market was driving up into that area and we see something on the histogram like, you know, where it's something like this, it's starting to break out. We get a little bit of volume there while it paused, and then it breaks out, void, breakout. We start getting more congestion, right? More congestion, breaks out a little bit more. That's what I want to see, right? This would be an indication of accumulation. Volume is growing while price is going up. That tells me that at the very least, the next pullback is going to be a lot deeper than most buyers are going to want it to be. So if buyers are looking for it to hold here, it's probably going to go to like here. Again, context is everything. But like we had here, this initial move down, just looking at today, the volume cluster was right there and the market went above it. I have to assume that the market was going up. They broke above that volume node. That must have been sellers. Then they built their POC up here, and we saw how it all played back out again. There's a lot of assuming that you have to do, but as long as it's making sense with the story, then it's fine, you know. The big thing is really just to do it over and over and over and over again. Like right now, from this perspective, we know what happened. We just needed to wait for a bit more of a story. This was the chop zone inside of here. They got that flush underneath the lows because it's the Nasdaq, and the Nasdaq's a vindictive SOB, and that's how it rolls. They got everybody out underneath the lows and then screamed higher. Guess what? No chance to get in because that's how the Nasdaq rolls, right? So it's just the type of personality that the market is. Buyers will be looking at this thinking, okay, well, we've got an L4. Swing shorts will be selling here with stops above the L4, but their targets are going to be back down to, you know, probably the volume cluster, which is easily 2-to-1. 2.5, almost 3-to-1. So shorts have a reason to try coming in here, but the probability is definitely not in their favor. And that means that buyers will be looking on the other side of it thinking, okay, good luck shorts, but we're going to be buying this L1 and L2, looking for it to keep going. So what you'd want to do then is to see, is the volume kind of reflecting that? We already had this kind of earlier volume, and now we've got a big enough leg off the base where we can kind of start that new story. The market's moving up. Initially, it was kind of blech sort of volume. Maybe, I mean, it was originally decreasing, I guess, while the market was going up. Maybe some profit taking, I suppose. Hit a little bit of a wall in here. And from a volume perspective, that's fair, right? I mean, you could see sellers looking for that breakdown point. They got the really nice breakdown leg. They'd be looking for another measured leg out of there. It's a nice low risk, high reward area of interest for them to try to go in. It didn't work. And it looks like all of them got stopped out right there, given all the VVPs. So with that rotation higher, now I want to see what happens next. We've got a POC shift all the way back up to 14,013. Well, wait a minute. Now we've got increasing volume while price is going up. That would potentially suggest now that we've got more than just profit taking. We've got accumulation in the sense that sellers are trying to get this to pull down a little bit further. It doesn't mean that this is the top and this is going to go screaming all the way down 7%, right? That's not what that means. What it does mean, though, is that we've got to be a bit more concerned that a deeper pullback is potential, which makes sense given what we're looking at for a retest back in the L1. So it lines up perfectly with what I want to see. Whether or not it's going to do it, that's a different story. I don't know, but that would be the current context, at least. The S&P, in hindsight, again, if you would have waited, I don't even know if they actually would have filled it. It's still to the tick. I don't know. I think it was much more safe to just exit where I did. I don't think I would have changed my approach to that. Going into 10:30 around the corner, gigantic reversal bar on the 15-minute on the S&P, and, well, the indexes as a whole. Really, really big reversal move. What a bull bar. Now, from the perspective of bulls who maybe miss this move up on a 15-minute, maybe they're 15-minute swing traders. Well, the actual trigger, if you look at from the very, very top, a trigger would be consistent of breaking above a signal bar's high. That only happened once. We've only got a first long. With that's it. Buyers showed up once and done. So maybe we get a little bit of a pullback back to 14K for a re-entry, kind of an entry defense. Buyers who bought above that bear bar, even though at the time it looked awful, it worked. And now that they know it worked, they might try to buy that retest, trying to get back in the train that they missed. So back around 14K is still a zone of interest. S&P bulls continuing back up now and testing 72 quarter. Not really much else going on. Doge pulling back pretty hard off of the top. Excellent. Give me that dip to 20 cents. Rip those FOMO buyers in half. I want to see the blood flowing. Those are the kind of dips that you want to BTFE into, right? Big continuation breakout to the upside. So now put this into context. If this was shorts building in and accumulating, they're now underwater in a really bad way. Now maybe, given the VVP at the top initially, we hit some stops. It's immediately responding just above it, so if it starts failing back down, then that would be more indicative of sellers just absorbing the top to push it back down for that bigger move. But if it starts continuing back up again, then another VVP breakout or a couple of them on stop runs would make a lot of sense. And then these shorts are really underwater. See, there's another one. Oh, there's another one. I don't think any volume traded there. It's a literal void. Now they backfilled it. Markets don't like that. Like, whoa, wait a minute. Oh, we can't have that. So now the zone of interest, knowing that these shorts are stuck, where do you think I want them to pull back to? I want them to pull back to 14,013. And I want to see them respond to it by getting out at break even. Show a lot of volume coming in there. On the shorter term, maybe you could utilize, accumulation volume on the way down or something, but... It all comes down more so to context, of course, but... Right now, we're trying to find a new story. So, we're kind of starting out a new book, and we're not sure what the plot line is yet. It's chapter 2. Who was saying 960 support? Steve, there you go. Bounce. Now, from the options perspective, for the longs who were more on that side of things, this is a viable place for buyers to take profit. It would make sense, given the rally up that we've seen so far, that a lot of buyers on the call side, the option traders, the dip buyers who are trying to buy low but reduce their cost basis a little bit, this is going to be where they're starting to take profit. So I think it makes sense for a lot of those buyers to lighten up. See if we can get a dip back down to those 14,013s. The volatility's been really calm and quiet. You might have to sit more on the scalp side here. $10.22 getting a little bit later in the morning session as well. Like to see that dip down back to volume. Just need a little bit of a slide. No, not this weekend. The next VIP webinar is next weekend. Next weekend, the 24th, I believe, is the... Yeah. Getting close. That might be enough if they plot another strong bull bar here. S&P is dipping back to the volume node. Come on, Nasdaq. Nice little push into this volume cluster to see if we can get a bounce back up. Scalpers initially will be looking for the continuation pop. Whoo, big, nice. Pop up. Scalpers got that bounce. Beautiful pop off that 14,030. Again, we're stuck left on kind of the sidelines with the scalpers perspective until we build a bit more of a story. But this 14,013 area is a nice zone of interest. And given that took about zero risk, that was right around 2-to-1, even with that little move. Secondary dip would be underneath around the 14,040s. And for that, let's get the volume off the top to see how they want to build this. So right now, it looks like a lot of buyers potentially might have gotten stuck around 2275. Put this volume back here. So that's the bull rally, and now we can see the drop. So the zone of interest for scalpers on the Nasdaq is going to be closer to like 2/4, down to the 14,000s, 13,998s in that area. Obviously, we're testing settlement right now as well. Watch this volume node around 13. If sellers are going to take it, that's going to be where they rotate off of. And they're not going to accept a whole lot of risk if they're wrong. Shorts looking for the continuation down, but again, not looking to take a lot of risk. This has got to be basically an immediate response back down. Nope, I'm out. No thanks. I wanted that to be a volume rejection, like by a wick, and then push right back down again. I did not get that. And I'm not about to stay short in the Nasdaq. If we can still get that dip down to the 14,000s, that's the zone of interest that I like around the 2/4, 14,000s in general. And if we look at the overall pullback, the first pullback was an L1. The second pullback, we've now pulled through an L1, and that's why we're finding support. We're in an L2. This is the deeper pullback zone. So this is where swings are going to be trying to get something to go. Just the L2, though. Man, what a fist fight here. There is a ton of volume building in the 17s. Got that L2 bounce on the 60-minute. Not that I had a whole lot of time to respond to it, but a little bit more of a dip down underneath the 14,000s would be preferable. The zone of interest really sits at 250. $14,075 and 99.25 for a short, at least a short-term bounce back up to the 7/4 zone. Do also have to stay cognizant of the fact that they could slip down to the Euro session highs again. It wouldn't be unheard of. Oh, whoa, wait a minute. POC just shifted down to 1350. I don't want the long anymore. That's a problem. We are showing and demonstrating accumulation volume, but now we've got two bumps. Usually accumulation shows up in the third. They just shifted the POC down, and it's rejecting. Buyers are trying to hold the L2, and that's great, but a deeper pullback is becoming much more likely. Scalper's perspective is still down in the same areas, but I don't want to have limits waiting there anymore. I want to be more shortcut, hotkey, scalp those zones, just because it's going to require a bit more speed. I'm short the Nasdaq. Yeah, and there's a lot of reason to be right now, at least off of these most recent highs. A deeper pullback makes a lot of sense, even if it does make another new high. Oh man, that's a lot of volume stepping up. Nice little dip down here. I didn't get the fill, canceling. See if we can get another flush down to the lows of L2 for a quick pop. There's so much volume building down here. Nice flush through the base. Beautiful pop back up. Trying to hold on for the continuation. Ugh. Nope, I'm out. Jeez, that flush fast. Holy moly. Holy crap. Ended up taking a loss on the last portion. Jeez. Nasdaq. Come on, man. It's 10:30 on a Friday. What are you doing? Whoa. Big volume just stepped up to the plate at 94.25. That thing is a wall. Okay. They did get back down to the Euro session highs to the tick and then churned back up again. You always got to assume on the vindictive side with the Nasdaq. That volume that came in there ahead of Euro's high too. Jeez. Oh, they are getting that bounce back up after the vindictive flush, of course. Right down to the Euro session lows. Backfilled all of that volume. And now if we combine these two together, that likely continues the accumulation phasing. Yep. Volume cluster still at 14,013 and price staying below. There's still a lot of problems for longs. And there is already some fairly obvious issues on the last two highs, but all right, well, we're going into 10:30, so let's get those questions in. We'll get those covered. While I'm waiting for questions, I don't think I'm in anything anymore, am I? No. Okay. So let's take a look at how the week went. I don't care about the dollar values. I only care about the percentages to ensure that we're trading correctly. So over this past week from the 12th to the 16th, 55.24% accurate. Total number of trades 105. Let's see here. So the 55.24 minus 100, the losses are 44.76. Average loss is 33, 1477. And the other side of that is 55.24 times the average win, which was twice as large, which is it's a pretty good spot to be in there. Fair enough. Okay, so obviously this week worked out incredibly well. In terms of the overall numbers, I mean, the last 2 weeks, I think the 2 weeks ago was a negative 1,000. That was a losing week. That happens. Welcome to life. The week after that, I think it was like a positive 800 or 900, and now this week it's a positive 13,000 on the trader's math scale. Sheesh. So obviously this week was approached just fine. Man, it feels like I got my face punched in this week, but that would make sense, though. Normally on the accuracy side, I'm a bit better. 55 is on the lower side, so that would explain why I feel that way this week, I guess. Either way, the important thing when you're going through at the end of the week is not the green number or red number in your account or out of the account, depending. It's the important part is the number. Make sure that you're trading correctly. It doesn't matter if you're up $1 million this week. If you traded incorrectly, you're going to lose that million next week. That's how the market works. It giveth and it very quickly taketh away. Always double check your math, not the dollar symbols. Or the yen or euro or whatever. So feel free to get those last questions in. We'll get those covered for you. And then we'll wrap it up into the weekend. Not much going on across the board either. Thank you. It's a pretty solid week. It's when you have these moves that just keep going and you're able to actually stay in them for longer than getting trapped out, to the tick at the bottom of a swing. Cough, cough. The week before that, it works out a little bit better. Oh, for sure. Yeah. I mean, you definitely want to pay attention to the dollars and cents in the account, but you have to think of it more from the perspective of the inventory of a business, right? We can't do business as traders without some type of capital, whether it's Bitcoin or dollars or yen or whatever. That's your inventory. Our job is to grow our inventory so that we can sell more and make more money, etc. So the objective is to build our base points so that we can grow our inventory. So yeah, the job is to definitely protect that inventory. But by solely focusing on the inventory in and of itself, you lose all sight of the process, and eventually you let all of your inventory rot. That would be the other way. I don't like rotting inventory, you know? All right. Well, that's going to do it for today, for the week, pretty solid week, all things considered. I hope you all had a great day of trading, a great week of trading as well. It definitely was challenging. I mean, I'm not gonna say that this week wasn't without its hitches. Man, this week was tough. It was not easy. Those are the ones that, honestly, a lot of them happen in the overnight or going into the end of the day. That's when all the moves happen. So it really wasn't just this was not an easy week. So if you had a challenge this week, I guarantee you're not alone. But the important thing is to go through your numbers, go through your math, and ensure that you're trading it appropriately. And if it is negative, make sure that on the negative side, it's still in the appropriate range, right? If your positives are 1,000, it shouldn't be negative 20,000. There's a problem, right? So learn from those things. What's the strategy on the 5-minute ES for scalps? When I'm scalping the S&P, generally speaking, I'm looking to trade high volatility points for 1 point at a time. Usually is the case, or at least given the volatility right now. So what I'm looking to do is I'm looking for points of interest that I believe will have a big zone of interest or a big zone of resistance, enough to cause at least a 6-tick move down. I say 6 because my entry, it's the S&P, it's got to go through it. So that's already 2 ticks just getting entered in. It's got to do the same thing on my target, and my target's 4 ticks away. So 6, 1 tick below, 1 tick above. So in this area, when I'm entering into this zone, what I'm looking for, it's fairly obvious what I'm looking for, right? You got the breakdown, the retest. In this zone at the time, I believed that there was more than enough volatility to be able to push us down a point. I was wrong. It didn't work. It went up to the next area, and the reason, like we talked about yesterday, I'm adding here is to increase my probability. That didn't get it done either. I added here to increase my probability further. It did test the target, but I did not get filled. And then it started rotating back up. I didn't want that loss to grow, and I exited. The major objective or the point of those types of scalps are to look for high volatility areas that are likely to procure enough of a move for a scalp. That's really the entire point. Now, you can get that job done in a lot of different ways. I do it more in the micro scale, like candle to candle to candle. But that's not to say that you can't approach this from a different perspective as a scalper as well. Let's say you wanted to be a buyer on this pullback, but I don't know where I want to be a buyer. The zones that we talked about earlier, if you remember, if you rewind on YouTube, we're back here. Obviously, that wasn't perfect by any means, but it was back to that zone or at the lows. Well, this one obviously didn't hold. So the next zone of interest would be down here. So while the market is like here and it's pushing down, pushing down, pushing down, from a scalper's perspective, I could approach this and say, hey, you know what? I'm going to look back at this zone right here from the top to before they broke out. I want the volume node. Their volume node was right there. So I'm just going to blind enter. Obviously, the benefit of hindsight, we know that it worked, but I have to be able to show you an example. Otherwise, it's not going to work. So we know that it bounced, but you can see, depending on how you approach this, this could have very easily have been a loss. If you were along here, but with a very small stop underneath this low, then you got taken out. Your reward would obviously be justified way up at the top. So the reward factor versus the risk and the probability makes sense. But if you approach this with a wider mentality, right? Let's say you were entering there, but from a scalper's point of view, I want as good a probability as I can get. Well, where am I going to get that? I'm going to get that under here. If I put my stop way back here, right? You have to be able to first off stomach that size of a stop. But the second of all is that I'm not looking for 2-to-1s on this. I'm trading high probability. I'm looking for a 0.5-to-1. I'm willing to risk twice as much as I'm willing to make because I know that that's what I need to do in order to get my probability up into the 85+% range. That's the trade-off. So if I were doing it that way, my stop would be way the heck down here and my blind entry would be there. And if you're looking at a half deviation, their target was right there. They got hit too. And their target's underneath the volume node, which helps. So, I mean, you can approach this a bajillion different ways. It just depends on your risk tolerance really more than anything else. You know, you have to look at that and say, are you willing to risk a 0.25% move on the S&P? You know, might want to go to the micro, you know. So that's the idea when I'm approaching it on the candle by candle basis, is just looking for volatility points that are high enough to procure a scalp. However you define a scalp, that's up to you, you know, but anyway, that's going to do it. So, per the usual, you'll be able to watch it back. You should be able to just rewind. You'll be able to watch the recording back whenever you want to. As far as the week goes, the big thing that we always say going into the weekend, make sure to take a break, right? Get away from the markets. Do something else. We make more decisions in a single day than most people make in a week. We've got to be able to get some mental rest. Let the brain meats rest so that we can come back with 3 pounds of rejuvenated between our ears rather than dead, tired, and useless. So get some rest over the weekend, and we'll see you all back on Monday, all right? Have a good one. We'll talk to you all later. Thanks.